areas for the day, and using the current strategy that I'm working from at the moment. So right now what I'm looking for is I need the daily to be in either an up or down trend. I need, if we're in an uptrend on the daily, I need us to break below daily swing lows. Most recently, if we have recently broken below daily swing lows, then before we break above daily swing highs, then I also need to see us be below 4-hour swing lows as well, right? So say in this sense, now looking at Euro USD, you can see why I'm just going to move on from Euro USD. Why? We're in an uptrend and we've most recently broken above daily swing highs. Okay, so what I would need to see is us set up these daily swing lows like so. So basically I would need to see this day's low set at this price or just not get below this low to the left. And then I would need to see a break below that low before I'm even interested in Euro USD. And then if we get that, then what I would also need to see is also a break below 4-hour swing lows, again, before I see a break above 4-hour swing highs. Okay, so basically, the swing low and swing high thing is the exact same on the daily and the 4-hour. The only difference between the daily and the 4-hour is I need to look at the trend on the daily. I'm not so much concerned about the trend on the 4-hour. 15-minute. So that's why I'm moving on from Euro USD. Pound USD, exact same thing. So I would need to see us break either these swing lows or set up new swing lows and then break those, because we're currently in an uptrend and we most recently broke these swing highs. Aussie USD, we are currently in a downtrend, okay, and we most recently broken swing highs, so that's better. But what we need to see on Aussie USD is a break above 4-hour swing highs, because what have we most recently seen? We've most recently seen on the 4-hour a break below 4-hour swing lows, represented by this guy here. So we need to see a break back above these 4-hour swing highs here, or form another set of 4-hour swing highs and break those. Okay, so that's Aussie USD. We have that alert here. And then yen. This will be the last Forex pair. And then we'll quickly look at all three major US indices. We'll look at oil and copper. So copper is actually the only one presenting a possible opportunity for the day looking like. USD yen, we're currently in an uptrend that has been fighting itself. So if we look from left to right, we're still push up, right? We tried to break this guy, failed, right? And then pushed up again. And then funny enough, the guy who actually broke this guy over here to the left, that, we see a push up, retracement, push up again, before we see a push down. So the guy that actually sent us lower and closed below that, being this guy here to the left, right, being this swing guy here to the left, was actually taken out here as well. So you could say it's an old uptrend, or you could say possibly it's a new daily uptrend that's just gotten started in May, okay? Either way, we're looking at a daily uptrend. So in that sense, what do I need to see? A break below daily swing lows again. Now, NAS 100. So NAS 100, clear daily uptrend. Okay, so we need to see a break below these daily swing lows here, or set up another set of daily swing lows and break below those. SPX 500. Again, clear daily uptrend, and we need to see either a break below these swing lows here, or a setup of new daily swing lows and then a break below those. And then Dow, we'll just use the futures. I'm not sure if there's a USD for the Dow, and if there is, I haven't been able to find it for Rwanda. Again, we have an uptrend on the Dow, but what do we need to see? A break below daily swing lows, but we're actually a little bit closer as it relates to Dow. And if we break below these swing lows on the daily, we'd actually get into this fair value gap area with a real gap as well, right? So we have this fair value gap between these two candles here, and then we also obviously have a gap here, right? And we can clearly all see. So that would be nice. And then we could also get below this swing low down into this area here as well on the Dow. But regardless, if we break this daily swing low, I'm going to start to look for opportunities. And what would I look for? Again, I'll look for a break below 4-hour swing lows, which would likely come in the way of us just getting below this swing low, and then The next thing we'll look at it on when we look at copper. But before we get to that, let's quickly look at West Texas crude oil. So remove these drawings. So West Texas, we're in a downtrend, or we're in a new daily uptrend, right? And it's kind of the same thing as what I was talking about with yen, right? And that new possible daily uptrend. So what have we seen? We've seen previously a downtrend all the way down, which we can all see with very clear eyes. But what do we see at the end of this downtrend is we see a swing high here that makes a new swing high. So it's above this guy, definitely above this guy here. Swing high to the swing high to the left and swing high to the right? And not only is this a new swing high, right, but this new swing high pushes lower and makes a new swing low. And we break up and break above that swing high that made a new swing low. And the nice part is, as we attack this swing low and the body of this swing low that made this, that closed above the swing high that made this previous new swing low, we fought it and pushed away from it. Fought it again, pushed away from it. We fought it here. We seem to be trying to push away from it, right? We're doing that after taking this daily swing low as well, right? And we, pushed higher here after taking this daily swing low to the left, okay? So this could be a new uptrend. That's what I'm forecasting on oil. I could be wrong though. This could all just be, pushed down for us to push higher. Maybe we do get a little bit of a brief push higher that makes me believe it's true. We get a push into this area over here to the left, and then we get slammed down. Maybe that's the case, right? Or even just push higher here, and we get slammed down. Regardless, I am currently in an oil bullish trade. So we'll see how that continues to play out. But I'll look to add in from an intraday perspective if and when we get a break below these 4-hour swing lows here on oil, right? Right, and then the nice part is we would actually get into what appears to be a very nice area, and likely is a nice area on the 15-minute as well, which we can confirm here, because what do we have? We have this area over here to the left in terms of fair value gap that was used, and we have a swing low above that. In terms of that fair value gap, we also have this unused fair value gap here with swing lows above it. So this swing low, this swing low, this swing low, right? And then we have this unused fair value gap as well, okay? And then finally, looks like this one, tiny one down here. Yeah. So we have those in terms of areas. But again, the main thing that we're looking for in West Texas is a break below, first and foremost, this 4-hour swing low. And then likely what we'll see is a continuation to break below this 4-hour swing low here as well. But as long as we get a break below this 4-hour swing low, then we can look for what we're going to look at now on copper, as copper is actually giving us, the daily and 4-hour setups that we need to see. And then now only we need to see after this is 15-minute confirmation, and then we're good to enter. So copper is a downtrend. As you can see here from this guy all the way down lower, we have not had anybody make a new swing low below that guy. And on top of that, all the new swing lows that we have recently made. So if we just kind of pull left and forget about everything to the left here, and let's say that we're dealing with essentially a newer bullish uptrend, what do we see here? We see a push up and then a retracement, right? And then we see the swing low that pushed above said retracement here. So here and here. So whether it's this swing low here in November 28th or this swing low here November 21st, we close below both of those. And again, both of these swing lows are the swing lows that after we push up, retrace lower, shoot us higher, right? Or even if you want to talk about this one, it's a more recent one, again, we get below this one, right? And on top of that, the most recent new swing high that sent us below these 3 swing lows to the left up here has not been taken out yet, right? We haven't even really attacked it. So calling this a copper current downtrend. Now that being said, I'm not going to sit up here and BS you. I am longer term bullish on copper, but this is a much longer term view, more towards the end of the year. This is definitely more intraday to, more medium term trading going on right now. But again, current downtrend on copper. What do we also have? A break above daily swing lows. And then on top of that, we also have a break above daily swing highs. I'm sorry about that. Break above daily swing highs to the left. Daily swing high, daily swing high, daily swing high as well. All right. And then daily swing highs as well. And then we have a break above 4-hour swing highs. Now, what do we need to see? We need 3 things out of copper, all before 10 a.m. Okay. We either need a break above previous session highs within the same week. So they could either be, let's say, for example, today is Tuesday. They could be Monday's highs, or even, the trading from Sunday's highs as well, in terms of if those are higher than Monday's highs. But in this sense, we don't have that. Here we have Sunday highs, which are lower than Monday's highs. So we need to see a break above Monday's highs. Or if we were saying we were in Tuesday, for example, if we were in Wednesday, we also might maybe see if we could just get a break above Tuesday's highs. We don't have to go to Monday's highs because we're within the same week, right? Now, if we're looking at highs within a previous week or from another week, what we need to see then is we actually need to see a break of those weekly highs or lows. So what I mean by that, so here we have the weekly candle. So if we look at the dailies, right, let's look at the daily candle, right? So this is the previous week all the way from Monday here, right? And so the high in this sense, the high from the week is just the Friday high, right? It's the previous Friday high. So we either need to see a break above these 15-minute highs or a break above, the weekly highs as well. That's kind of more high probability in that sense. And that really kind of more just comes in line with times when maybe the market kind of gets really, kind of discombobulated in one direction, and we see a break above previous session highs, and then we continue above, weekly highs as well, right? And this is all for bearish, right? Now, if we don't see a break above previous session highs within the same week or previous weekly highs, the last thing that we could see is a break above the current session highs if we have broken outside of the Asian range session highs of the Asian range highs and lows for the current session. So what I mean by that, we've currently broken above the current Asian range highs. So if at this point we turn around and break below these Asian range lows, the next thing that we would need to see before we could get an entry, and this is all before 10 a.m., is a break above the highs of this current session. Okay, so what's most likely to give us an entry today is likely a break above the session highs from Monday. But again, we don't have to get an entry today. We may or may not, because again, everything has to happen before 10 a.m. We're going to walk through the copper idea that I went through this morning as it actually played out, at least somewhat. So that being said, we'll go through it just very quickly. I'll say this. When it comes to trading things, especially like commodities and really like indices as well, I'm getting a lot of practice with using TradingView using Thinkorswim in terms of actually trading them. So when it comes to actually doing the entry, I will do all of my entries in the Thinkorswim like desktop platform that you can see down here, right here. I do all my entries there. But it's a little bit easier for me to move around the charts on TradingView, so it's a little bit easier for other people to watch. That being said, unfortunately, the thing about TradingView is, especially with a lot of futures data, if you don't pay for the data, you get it on a 15-minute delay. So this is a little bit stale right now. Copper is actually a lot higher than this. It's like at 3,875 right now, 785 right now. So it's a little bit delayed, but that being the case, I was still able to get into this trade because, again, like I keep saying, I use the actual Thinkorswim platform to make my entries, and then I just, I do pre-charting on TradingView, so like anything before like the actual trading session, where I'm not going to be trying to keep up with things kind of to a minute to 5 minute basis, and then once I'm like, ready, so what was ready for me today was essentially this idea of once we had this setup of us breaking above this 15-minute high like we talked about earlier, that's when I started looking at Thinkorswim versus TradingView, again because you have that price delay with TradingView. That being said, the other thing I will say about this trade is the way that my strategy actually works is I will piece out of an opportunity. I don't go full in, full out. I don't go full out at my first target. What I'll do is first target is usually 1%, and I like to be able to get, so in this sense, I like to be able to get at least 1.5 to 2% to that first swing low area, or in the case of a bullish trade, first swing high area on the 15-minute. But what I do is I'll actually go 1%, I take 25% of the trade off, then at 2%, I would take another 50% off, right? So in that sense, I've taken 75% of the trade off and I have 25% left to run for what would be 3%. Okay. Now, I did not do that with this trade. I was just practicing getting a feel for copper futures and everything like that in terms of the contracts, the pricing of them, understanding that, because especially with things like futures, it's going to be like a little bit harder for me to actually go about setting up that kind of like that piecing out, because likely what I have to end up doing is actually entering like 3 contracts, right, and take maybe one contract off, and then maybe I look at the percentages of how I do things a little bit differently, and I test that for futures versus maybe forex and everything like that as kind of different risk management. But that's why I'm doing this forward testing, to kind of go through these things and go through these issues. That being said, what I told myself was, if we get to 2%, because that's essentially at 2%, what I do is, in terms of the risk management that I have currently set up for my strategy, at 2%, what I do is, like I said, I take off 50% as well on top of the 25% that I already took off at 1, but then I also move my stop to break even, right? So if this were to come back against me, right, I would be out of this trade for essentially about 1.25%. So what I did today was I just said, okay, if we get to 2%, the trade's done and dusted, and I'll get out. As you can see here, we just barely tagged that 2%, and then I closed that trade manually. Okay, so that's how the trade played out for me on copper. And like I said, currently price is kind of shooting back up. So it looks like one of those cases where I could have taken 2%, likely take 2% and then take a break even afterwards. But we'll see what happens. But yeah, so hope you guys are having a great trading day.